floor in Chicago. Well, we have Oliver Sloup standing by. He's with Blue Line Futures. He joins us right now. Oliver, kind of a timid start here to the final trading day of the month here. Do you see evidence of maybe some profit taking going on today?
Maybe a little bit in the soybeans, but let's start looking at the corn. Corn's been a stick in the mud. We've just been right around, this 350 level for quite some time, give or take 5 cents on either side. We're looking at the bottom end of support coming in 342.5 to 344.25. This is contract lows as well as closing lows. The bulls want to maintain price action above this going forward to round out the month and get us into November. If we do manage to break down and close below, there could be another 10 cents below. On the top side of resistance, 352. We've been harping on this for what seems like a lifetime now over the past couple months. Is the 50-day moving average. We have not closed above that since July. We do know that funds have a decent-sized net short position. They actually increased that last week. So if we are able to get consecutive closes above resistance on the back of a fundamental catalyst, that could encourage some short covering. But until we get something new, I think sideways trade is the way to go.
Okay, let's run down these grain futures for everybody on the corn. Like you mentioned, let's take a look at December, where we are now trading lower. Let's go ahead and go to the big board. We have January. Well, this is soybeans here. If we can pull up the corn here, let's take a look at that December contract. It's down 2.5 at 346.25. The March down 2.5 at 360.25. Now to the soybeans. We have that January contract now trading 1/4 cent lower at 984.25. March down 1/4 cent at 994 3/4. Of course, keep in mind that November soybeans, as we take a look at that particular contract, it is first notice day here on that contract, so that is trading independently. On the wheat trade, let's take a look at Chicago first. December down 7 now at 417 3/4. Unusual pressure here on the wheat market today, and Kansas City wheat has been weaker as well, even though we had an overnight export sale. We are down 6 1/4. December trading at 415.5 per bushel. July down 7 3/4 at 464.5. That's on the low of the day. We are almost 9 cents, well, basically 9 1/4 cents off our earlier high from last night. And Oliver, this is with news of 100,000 tons sold to Iraq.
Yeah, and that wasn't very supportive. We're keeping an eye on the technicals in the Chicago wheat. We're looking at contract lows for December, 422.5. That gave way and led to some accelerated selling pressure. And now the next line in the sand is really about 415. But at the end of the day, wheat has just been one of those markets that's been under a tremendous amount of pressure over the past month or so. We've traded lower 18 out of the last 24 days. And when you talk about a trend, that's a pretty significant trend. Now, breaking below contract lows might encourage some sort of capitulation this week, but I'm not going to step out on a limb just yet and try to pick a bottom in this market. And we do have the U.S. dollar has also firmed up a little bit over the last week, and there's a Fed meeting tomorrow, which could put some volatility into the currencies, and that spill over into the wheat market as well.
You don't necessarily think that the wheat buyers will jump in there then before the end of the calendar month?
Yeah, I am not banking on it. That's for sure.
Okay.